Hello everyone, good afternoon and welcome to today's Trading the US Open live here at the Live Trade Room. So just to explain what you can expect over the course of the trading session with us here is the fact that we're looking for high probability trading opportunities, and we have a bit of a process. We're technical traders, so we trade the markets technically, where we understand what's happening in the price action, where we go through a bit of a process for us to identify high probability opportunities firstly. Secondly, we look to execute with as much consistency as we can, and when it comes to managing the trade, we need to mitigate risk. We need to expect the markets to perform in a certain manner, and if that's not the case, and certainly yesterday afternoon and this morning is a case in point, where the markets don't quite always perform as you would expect them to do. So really our attitude is quite simple. We're looking to cut our losers short, and if we see prices pull back and behave a little bit more erratically, then we're not really interested in trading them, so we can step back very, very easily. And that's the whole principle of managing trades effectively. We'll also look at the psychology. Today we'll look at the psychology of today's price action, which we've already seen this morning. So clearly these markets are sort of finding their feet, so to speak, being a little bit erratic, very difficult to trade actually, certainly parts of yesterday and today, but that's all part and parcel of trading these financial markets, and we do so with one aim, and that is to book in consistent returns when we trade. So if we could start, as we always do, with our risk warning. Please do familiarize yourselves with the risks involved in trading these financial markets. So take a moment to familiarize yourself with the risk warning on screen. And what I'll do is we'll start with a quick look at some potential market moving news. So for this we'll get up Forex Factory. So I'll just bring this up onto screen now. So it's important to note that we've had a positive services PMI number, which just literally implies that services in the UK are expanding. Anything over 50 it means expansion, anything less than 50 means contraction. So services are expanding, actually more so than forecast. It was a forecast to be a 53.9, and we got a decent sort of improvement on that, 54.3. So that has undoubtedly impacted the pound, so we'll have a look at the pound shortly. But as far as today's news flow is concerned, we've got major news impacting the Canadian dollar. As you can see, we've got trade balance and labour productivity at 113. This is all UK time. I'll change this. There we go. There's the correct time, 1:05 p.m. If we just scroll down to Wednesday, so and at 3 p.m. UK time as well, we do have the Bank of Canada making a statement and releasing their overnight rate, which is currently at 1.5%. So really, a lot of this is built into price already. So if we get a slight deviation either above or below this particular level, then we're likely to see a lot of volatility coming into the Canadian dollar. So we'll have a look at that shortly. So that's just a little understanding of the news flow. Of course, we have to contend with lots of news events concerning a whole variety of fairly significant macroeconomic developments. For example, sort of global trade tensions between the US and what seems to be the rest of the world. There's issues in the oil markets with Venezuela and Iran, and certainly what OPEC are looking to do with regards to restrictions which are still in play with the oil markets. And then you have Brexit negotiations, and you have statements made on regular events, and of course the markets are going to react accordingly. So, so with that all in mind, then let's get up the trading platform. So this morning we were looking for a couple of opportunities. The first one was, in fact, the Aussie dollar as well. We'll get the Aussie dollar up so you can see what's happening with that. Where is it? Yeah, sorry, there we go on screen. So we'll start with the Aussie dollar first. Looking at a daily time frame, we'd expect to see this market continue lower. And this is a reality of us trading with consistency. So we find a lot more value in terms of understanding what's happening on a daily time frame. And when you get these pullbacks, you can often get really great significant opportunities to sell these pullbacks when those opportunities arise. And we like to use the importance of daily timeframes to enable us to navigate, potentially stay out prior to these moves, and then look to capitalize on them when they occur. But so what we were looking at this morning is a break below the 71.57, and we've basically teetered with it. We've toyed with the idea of this market moving lower, and at these lows here, which is the 71.44, we got some buyers coming in. And like we've seen a lot yesterday afternoon, this market is doing the same again today. So just a rejection of the lows. That is all that this is currently. But we saw a lot of rejections of lows yesterday, with the potential for these markets to, as we can see today with the pound dollar, that they're suggesting that they're going to continue lower. The euro dollar is not really playing ball, so a lot of indecision there. So really the Aussie dollar represented probably the best opportunity if we were looking for that dollar strength trade. There is the potential as well for some continuation, but we don't like when these markets break lower and then pull back above the low, which is the 28.08 level. So just before we go into a couple of the commodity markets that we really quite like the look of, and an indice market, let's just have a quick flick through the dollar just to see what's happening. So not an awful lot has happened in the pound yen, sort of choppy price action really today. Dollar Swiss is flirting with a bit more of a pullback in this market. You can see we'd expect a bit of a pullback, a little bit higher than these current levels. And then at that point we might look for opportunities to sell this market. Looking at the dollar CAD, we're seeing these levels just in here, potential resistance around this level, and it'd be interesting to see what happens next, and we'll come back to the dollar CAD very shortly. This is looking a little bit more positive than it is negative now, because we are back above the daily low. So we don't really need to look or to focus on that. We're seeing a bit of selling coming in against the New Zealand. So definitely a mixed bag really as far as the dollar's concerned. A bit of dollar strength in a few markets, followed by a little bit of dollar weakness in other markets. So with that in mind, then it's not giving us the best of opportunities. The euro seems to be strengthening a little bit against the pound, so that's worth keeping an eye on. So we're seeing a bit of European strength across the board, and potentially with a little bit of pound weakness creeping in. So the foreign exchange markets are a little bit disjointed, let's say, certainly the majors. So we can continue to look at them. We still like the gold market to squeeze lower. Of course, not today. It's not looking like that's going to happen today. But we are still in this on a longer term time frame basis. Oops, excuse me. So we'll get this up on screen. Do feel free to use your chat box, guys, at any point if you've got any comments to make. I'll just put a little note in there. Okay. I misspelt here, but you get the gist of it. I wonder if I can. Okay, so we do want to have a look at a couple of other markets. So we're getting a bit of buying coming in today, but we'd expect this market to continue lower effectively. The oil markets are quite interesting for us. If I zoom out, you can see where this market is coming from. We've got a strong sort of uptrend in this market. And we're potentially sort of toying with kind of breaking that kind of uptrend. Taking note of these lows. And the more recent high as well, which is the rejection behind this particular idea. So what I want to do is just change the color of this trend line. So it's an important level, but you can see it doesn't have to be too exact. So we don't want to get too caught up with this level, but we know in and around here there's the potential for support. When we look at a break beneath yesterday's low, which is roughly the 69.28, we'd expect this market to continue lower. But the market we've been focusing on, as you can see here, is the UK oil market. So we've been waiting patiently. The market broke lower in quite a strong explosive move lower, as you can see, and since then we've retraced, which has kind of been the plan of action for a number of markets that have made a move already today. They've all sort of pulled back fairly quickly. This is, I suppose, an analysis on the market conditions in which we're trading. It feels like a lot of these markets are just trying to test certain prices and certain moves, and they're all being defended, let's say. So there's a reluctancy for a bearish market to sell off, and there seems to be a little bit of a reluctancy for a bullish market to increase in price. So knowing these markets just allow you to just protect your capital a little bit more. Don't give the market the benefit of the doubt. So really, we've got on a 5-minute chart, we've got just a straightforward pullback. So what's interesting for us now would be potentially this low. So if we get a little bit of a pullback and a failure, there is a good opportunity that we could capitalize on a high probability trading opportunity to the downside. And like we always state, what we're looking to do is to get very impatient and look to cut our losers short quickly if we possibly can. We don't really want to be hanging around in markets that are not performing as we would expect them to do. So we're very comfortable with taking small losses. That doesn't impact us psychologically. It doesn't impact our ability to get into more trades, because we know when we get the markets that do break out, that do follow through with the price action that you would expect it to, that's when you can get a multiple of all of those, perhaps 2 or 3 or 4 losses that you might incur. You can see a nice strong move in your favor. So we just need to remain pretty resilient, continue to look for these opportunities, and probably just be a little bit more selective now maybe than what we would like to be. But when we do get these markets opening up and they start exploding in either direction, it's just now we're looking to trade a triple top, as you can see in here. So I'll put a level up at these levels, and I'll get my, so we've got one top, two top, and now effectively this is the potential third top. Each time we eventually get a little move lower, so we're just going to keep an eye on this market to see if we do get those moves lower. We're looking to capitalize on a move to the downside in the UK oil market. So at the moment it's just pulling back, so it doesn't look great on a daily time frame. So we can be a little bit more conservative, let's say. This is still effectively a pullback off a high. It does look like we are getting that little bit of a move. We've got the 77.02, the 77.29 level. So we're getting this market just moving over, and we do like the idea of this market moving lower from these highs. As we look at the daily time frame and we zoom right in, it just gives us an opportunity for this market to move lower. So let's come back to this in just a few seconds, because I just want to flick through and show you what's happening across the equity space. So the potential for these markets to sell off, they just haven't actively achieved them yet. We're getting a bit of selling price action coming in. The interesting level here for the FTSE, if we are going to get it, is a break beneath the 74.13. It's been threatening. That's been threatening to occur now for the majority of the trading days. So it does remain to be seen. Another market we were looking at and we were able to capitalize on a bit of a profitable break is the Euro Stoxx. So we were looking very carefully and we're able to capitalize on a bit of a move to the downside. Initially we had a stop loss up here. Our entry was somewhere in and around this level in here, and no, it was a bit lower, I think. And what we did was we effectively removed the risk on the trade, brought it down to just, I think, three points. So when we saw this move and it was moving as we would expect it, we saw a little bit of a structural failure, and then actually a really strong sort of pullback just to this level in here. So we kind of weren't interested in hanging around in this market based on this particular bit of price action here, and since then we've just literally moved sideways. So there is the potential for this market to move lower from these levels. I just want to show you a couple of other observations. So we do have another low just sitting in this space in here. So it looks like we're beginning to get that little bit of a move now. Let's just have a look at this. So you could put a bit of a blanket over this price action, couldn't you? So it definitely represents a viable opportunity, that and the UK oil. So we're getting a bit of a bounce off these lows. So these still might represent some good opportunities. So now let's see if we get a bit of a close below that level. We might look to get involved in both of these markets to the downside. I was just looking at the Euro Stoxx. There's a strong level of resistance around these levels. We've had a really significant pullback, but actually when you look at this chart, not by any major, okay, it's moved back up to the 33.40 level. Hi Matt, what do you make of the Euro Aussie? Price currently messing about at previous weekly highs, and after the Aussie good news is a reversal from here likely. Yeah, interesting shout there, Matt. Just want to keep an eye on these two really, just to see how these perform, because they might still give us an opportunity lower. Especially if we start to see some weakness continue. Across the equity space, and that's particularly likely to happen. So we just want to see if we get a close beneath these levels, and if that's the case, it would represent effectively a pullback trade on both of these. Right. So let's get into this market again at this level down here, what we'll do is we'll place our stop loss just above this high just up here. So there's our stop loss, there's the high, and we just want this market to continue to roll further to the downside. Let's see if we get a follow through in the UK oil. So what we'll do is we'll just place this market top right and keep a close eye on it, and we can look at the UK oil here. So really this is a 10-point stop loss. So again, because of these market conditions, we're looking to keep these trades pretty tight, and we're quite happy to do that. So again, we're testing the hypothesis of a market bouncing off a low, coming back to previous levels of support, and then looking to move. So we need the markets to follow through. But if they don't follow through and they continue to be somewhat messy, then obviously we'll know that that's the case pretty soon. And we're not exposing significant amounts of our capital in these trades. With a strong positive risk reward, actually, it's worth pointing out that, you know, we could even to get to these new lows, even though we'd expect this market lower eventually, but that would represent a good probably 2-to-1 risk reward trade, just down to these recent lows. So worth looking at. We're still going to bide our time really with the UK oil market. We've just pulled off these highs, but if we get into it, we're looking to keep the stop loss fairly tight on that trade as a result. So just going back to your question there, Matt, apologies. So first thing, you've mentioned the Euro Aussie. So we're seeing that the Aussie is just fighting back a little bit against the dollar, but from a range perspective, not an awful lot going on. I hope you would agree. And just looking at the Euro dollar, we're kind of in a similar position, aren't we, effectively? I suppose you could argue the Aussie dollar is marginally weaker. So just looking at this price action, they're almost two neutral markets, but I would suggest that the Aussie is probably marginally weaker than the Euro right now. and that's just a bit of strength and weakness analysis. So so prices are currently messing about at previous weekly highs, and after the Aussie good news is a reversal likely from here. It's a difficult one to answer because we'll go in and have a look at that now, because there's no way of telling against something like the US dollar. So let's get up the Aussie, the Euro Aussie. So let's get the daily high up here. So this is what you're looking at. We'll just record it with, let me just change the color of this so that it's a very important level in and around here. And you're suggesting that is there potential for an opportunity to sell it? Well, it's hard to see right now. To be fair, if we do some strength and weakness analysis, it's hard to determine whether that's the case or not. What we can say is that there is a clearly defined level of resistance in here. So then we sort of break that down a little bit more, and we identify this candlestick indecision. We can see a bit of a rejection to the downside, slight bullish aspect to it, but again failing to sort of break these highs, and the same thing is happening again. So we have this little period of consolidation in here, and this is over a 4-day trading period, but the market conditions at these levels are consolidating. So really we would want to see a little bit more. The only reason I say is because there's been a lot of rejection on the 4-hour. So that was exactly what I was going to suggest to do now. So on a daily time frame, we hope you agree there's a little bit of consolidation around these levels, around these highs. So with that in mind, let's go and have a look on the 4-hour chart. So really this is a good way to sort of break it up. Of course, we don't know which way this market is going to fall. It could very easily just continue higher at this point. However, the level that would be interesting for us to focus on is that we're currently in a 4-hour range between 160.40 to the downside and 161.72 to the upside. So what we would ordinarily suggest from a purely trading consistency perspective is that if this is a double top, which I think is what you're suggesting, and I would absolutely agree, it has the potential to be a double top. You've got two decisions to make. You can either trade this and suggest that this is now a sell trade at this level, expecting prices to push lower with a stop loss above that level, which means that your stop loss is smaller, and you would obviously be in a position of positive risk reward by the time price gets down to this level, but the risks of the trade would be lower, so it wouldn't necessarily be regarded as a high probability opportunity. It would be it'd be sort of a medium probability opportunity, because what you'd be, and you're always trying to double guess these markets, but what you'd be concerned about is the potential for this market to roll over, for this to be a low, for it to create multiple lows, and to provide support to the upside. So really, to answer your question, it's a viable opportunity. It's just a medium probability trade. Whereas a break below, if you can imagine, if we just take this off and we look at these markets and we suggest that this market comes down to this level, if we identify this level in advance, the 60-40 level, that is your kind of your high probability trade. And then that is a very bearish signal, double top, and you would expect normally to get a nice sort of explosive move for that reason. So I hope that kind of makes sense. So Right now, it's a toss of a coin in terms of this market providing more support and breaking above. And equally, an opportunity to get into this to the upside could be a break above the 61.72. So it can actually swing both ways. Look at the 5-minute chart. Yeah, so look, there's all of these sort of previous lows. So there's a little bit more momentum to the upside. So you kind of want to see really strong structural failures to the downside, and we're not really getting them. So right now, certainly in my opinion, Matt, it's one for the watch list. Absolutely, one to keep a close eye on. But we're not getting that decisive confirmation from the euro dollar or the Aussie dollar either. So I'm not surprised that we don't really know which way to play this market. Getting a strong bounce back in the oil market, so that's really in a tough spot. We're getting the little move to the downside, so hopefully we start attacking these lows in the Euro stocks and we start getting a bit of downward momentum into this market. And let's see what other opportunities may arise. So from a trade selection perspective, we were looking across a lot of the dollar pairs. Not really liking many of them, to be fair. Not giving us great opportunities today. So the dollar CAD. So let's go into the dollar CAD and let's just, what I'd like to do is to make it half the screen, if that's okay, just to keep an eye on the breakout here in the Euro stocks and the potential for this market to flush lower, although it doesn't seem that willing to do so just yet. So let's focus on the dollar CAD. So we can see that a news event is now out, and over the last 2 minutes, probably marginally a bit more bullish price action than negative. So nothing really effectively has happened. So with that in mind, let's just see what that news event, what the outcome of it was. So the trade balance figure is a slight improvement on the expectation, but by effectively 1 billion. So obviously that's an improvement. But when we look at trade balance, you know, they run at a deficit more so than a surplus, but in and around that level is a pretty even balance. Labor productivity is actually less than what was expected, and that's a quarterly figure. So all in all, bit of positive, bit of negative. We are building up to the 3 p.m. overnight rate for the Canadian dollar. So this is the dollar CAD. A bit of sort of dollar strength is kind of slowly creeping into it, but over that news event, we're talking about a 5-pip move, nothing of any major interest really just yet. So again, just sitting around these highs, not much really going on with those markets. So really, as we flick through some of these, we're not really seeing great opportunities today. Sorry, the screen will settle down now in just a second. So there's a potential for this market to roll over to the downside, which is in keeping with this little sort of breakdown here in the UK oil. So that's what we'd want to see. They're very correlated markets anyway, but we'll hope that this market squeezes down to the 33.15, and then we're very likely to get a little bit of an explosive move lower if we can get down that far. So let's just be patient if we can with a lot of these markets. So just finally, just looking at the dollar index, there is, and this would all be supportive of the general outlook for global equities. They're kind of looking lower, and that is one of the reasons why we're quite happy to get into this, because this gives us the better opportunity as we look across those dollar indexes, and we might get the FTSE following through. So we'll wait for the open of the US markets and see exactly what may lie ahead. Yeah, so it's on the watch list. Hi Connor, US trade balance better versus revised minus 45.7. Let's just see that particular figure. US trade balance, yeah, so you're right. It's come in as expectation, really, effectively the same. So we wouldn't be expecting that to impact greatly. But you know, trade balance is in the spotlight quite a lot. You can go back as far as you want, and the US always run a deficit. So a lot of that is just the fact that the US dollar is a global currency. It's obviously used all around the world, and as a result, it lends itself to deficits. So we're just, I mean, this is something that Trump is obviously trying to correct. So there's probably a little bit more focus on trade balance, but most economists just expect there to be a trade deficit. Now the internal sort of economics of it all, you know, certainly Tasso and James would give you probably a considerable answer on that, but I suppose it's just the nature of the US dollar, and the usage of the US dollar lends itself to running a trade deficit. So it's just come in as per expectation, really. So yeah, good shout there, Connor. So let's see how. So I would be interested in potentially looking at the FTSE as well, if we just get some continuation on this trade. So this is edging lower. So we're getting very close to seeing if we get a bit of follow through in the pound. Then we'll look to get into that market as well. And we'll keep an eye on the gold market, just because the foreign exchange markets don't really seem to be giving us an awful lot of useful information, I'm afraid. If you guys see anything differently, then do let us know. do let us know. So we have this market down here around the 74.13. So we can go into this on a smaller time frame. Let's go in a 15-minute time frame. We'll see. So we're toying with a break of that level. Let's just see how accurate that level actually is. So it is slightly higher. So the low is the 74.17, 74.16. So we can bring this up like that, and we'll see if we get a little bit of a break below that level. It looks like that's going to be the case. That would add to our Eurostoxx trade. Basically, the markets are, the global equity markets are selling off, and we're obviously in one of them. We're potentially looking to get into the other, and there's a bit of a level in here around the 74.36, which could give us a good, a decent stop loss in this market. So it might just be that we get the moves in the global equities, and there's a little bit of sort of bearish sentiment as well, so it'd be in keeping with that. We're likely to see a little bit of strength coming into the British pound. So now we're getting that break lower. Let's see what's happening to British pound. British pound is sort of fighting back a little bit. It would seem, yeah. So that's sort of in keeping with a potential FTSE trade. So I'm quite happy to get into this trade actually, and to take a bit of a position on want to see if we just get another tick lower, just off those lows. So we'd just like to see just one more tick lower, and then I'm quite happy to get into this market. I'm sure that will kick in any second now. I'm sure it will. So let's get into this market then. So we're now in. 25, 37. So we'll just place this entry order. So we're going to place our stop loss around the 74.38. So there you go, you get to see that level just in there, just above this high. So we're in these two markets now to the downside. We're in the Euro stocks and the FTSE with the expectation for these markets to continue lower. And hopefully we get a nice flush to the downside in both of these markets. We are due a nice run. We've experienced a lot of really strong pullbacks in some of these markets, certainly yesterday afternoon. So when we get these markets behaving as we like them, we'll be able to obviously capitalize accordingly once we get those moves. So we've got a 23 point stop loss in this market with a view of reducing that down when we get the opportunity. We've only got a 10 point we've only got a 10 point stop loss in the Euro stocks, 23 slightly larger. So when we trade commodities and also global indices, then we generally sort of trade slightly larger size to give us plenty scope to get in. And what we want to do is to just place a stop loss 2 times the spread, just above the highs, just give you a couple of points grace, because you want to get taken out of this market. You want this market to break a new high, and if it breaks a new high, then you kind of want to be out of it pretty quickly. But sometimes these markets, these highs are defended, and some sellers start coming in, and you can actually stay in a trade even though you experience a really strong pullback. So so we're in 2 trades at the moment. We're in a bit of profit in the Euro stocks, and we certainly haven't seen this market follow through just yet in the FTSE, but we're now in it. So the Euro stocks is just squeezing a little bit lower. Hopefully we'll get some follow through in the FTSE. We should really, if these markets are going to sell off, we should be seeing a decent move beneath these lows, because these are strong structural levels that we're selling. And I suppose if you're trading the market consistently and you're selling breakouts of really strong levels, then they're by far more profitable than trading levels where you get these false breakouts from. So if we get a false breakout, we get a false breakout. However, we want these markets to accelerate to the downside. We know they're going to be pulling back at some point, which is why we use these structural highs to allow a lower high to kick in, and then the idea is we wait for the lower lows to start kicking in as well. I mean, in terms of let's have a look at this from a take profit perspective. I mean, there's nothing but air beneath this level, so it would be, I say nothing but air. We've got this level sort of down here, so a really nice move lower. Very unlikely to get a strong move like that maybe in one go, but maybe you might get half of it today, half of it tomorrow. But really we would expect these levels here, the 74.89, and then the follow through again today to the downside is very likely to fit in quite nicely with the overall analysis that we're seeing lower highs and lower lows. So and that's what we're effectively trading. So let's see if we get some more continuation to the downside on a daily time frame. We should be, so we're hopeful that that's the case. So let's give this market a little bit of space, a little bit of time to unfold. If nothing, they're relatively slow moving. But then you just get these strong flushes in a fairly short period of time. So we're in these two trades, so I'm quite happy to let these trades run and see how we get on with them. The UK oil market is, of course, we'd expect it to squeeze lower, but and we are just below yesterday's low, except there's a couple of other sort of important levels that it needs to clear, and we've already had one rejection of that level, so it's sort of a mixed picture really. We are attempting low, and we could very well see a structural failure to the downside on a 15-minute time frame. That's what could make, if this is a lower high, then we're likely to see a lower low, and we are currently below yesterday's low, so it's a strong level of resistance in and around this level. So I think we're going to go with the UK oil market to the downside as well. So we do like the idea of this market moving lower. So okay, so we're now in the UK oil trade. So let's see how we get on with these trades then. So we'll just have to be nice and patient just to see how these trades unfold. So looking at some of these dollar pairs, and see if we get any good opportunities. Euro's strengthening just a little bit. The pound is still strengthening, which is obviously good for our FTSE trade. So if this becomes a bit of a floor in this market, then we'll benefit on the FTSE. The dollar yen, the yen seems to be sort of fighting back from those highs, doesn't it? The dollar Swiss, not an awful lot going on. Same situation with dollar CAD, even though we got the news out in just over an hour's time. Not much happening. Aussie dollar, bit more bullish price action coming into the New Zealand dollar. The euro was strengthening against the pound, seems to be coming off the highs just a little bit. Not much happening in the euro yen. Or the pound yen. Gold market just strengthening a little bit, coming back to these levels. We're in this market on a daily time frame, so we'll see how we get on with that. We do expect these markets lower, but we'll have to wait and see. The UK oil has given us the sort of the better opportunity. So let's see if we do get those moves further to the downside. 230 is likely to see how these markets will really react to the US indices. If some selling comes in, it's likely to provide us with a little bit of support for these sell trades to kick in. Okay, so that's effectively our trade plan for the session. We're looking at selling the UK oil market, even though we're getting a bit of a pullback now. We still have this level sitting up here, and above that level would actually be above the daily low, which effectively means that a sell trade will no longer exist in the UK oil market. Just a straightforward pullback on the Euro stocks. Same situation, a bit more of a shallow pullback really on the FTSE. We would have liked this to have extended a little bit lower than these lows, but with a pullback to maybe the 74.15, but very shallow pullback. So allow this pullback to occur. We still want to be selling all these three markets as price currently stands. And just the oil market, that's still potentially looking like it's interested in squeezing lower. Okay, so I'm just conscious of the time, guys, so we're going to switch across to our traders at the Live Trade Room. Those of you that would like to join us at the Live Trade Room, get access to over 76 live webinars per calendar month. You can do so, and there's a 14-day free trial beneath, so you can enjoy and access as much as you like, completely free of charge, with no contract, no obligation of any kind. So if you do wish to join us, click the link below, and we look forward to seeing you. You get instant access to the Live Trade Room, so hopefully you can join us there for the remainder of the trading session, and you can read the information below. And if you do want to join us, the cost is only $9.99 per calendar month, so hopefully you'll find that incredible value. There's lots of education there for you. There's daily trade watches. There's obviously outside of our daily live trade rooms every single day, there's a wealth of content and information there for you. So please do look at the at the link just below this video, and feel free to connect with us, subscribe to the channel, click the bell and you'll be notified when we are going live. You can also connect with us through Facebook, Instagram, Twitter and LinkedIn. The details are all there on screen. So thank you very much for joining us. We're going to switch across now to the live trade room. Thanks, Connor. Cheers for the update, and I'll be live now in just a minute or two. So from everyone here at the Live Trade Room, take care, and we'll speak to you soon. Bye for now.